Tesla is on track for its worst month ever, down 24.86% so far. Tesla shares are on pace for their worst monthly performance as the electric car company faces a spate of recent issues. Tesla stock is down 24.86% in March, as of Wednesday, pacing for its worst month since the company first went public in 2010. Other recent stock performance figures look pretty rough for Elon Musk's car company. Shares have fallen 17.21% in the quarter, putting it on track to record its worst quarter since the fourth quarter of 2013. On the week, Tesla is down 14.51%, with shares on track for their worst week since February 5, 2016. Recent declines have come on the back of a federal investigation into a fatal car crash involving a Tesla vehicle in California earlier in the month. In response, Tesla has said it was assisting with investigations, although it also defended its autopilot technology. Moody's recent downgrade of its corporate family rating on Tesla has also weighed on the stock. The agency downgraded the company's credit ratings Tuesday and changed its outlook to negative from stable, citing significant shortfall in the Model 3 production rate and a tight financial situation. Those concerns were echoed by Morgan Stanley, which highlighted in a recent note that the company had to accelerate its Model 3 production if it wanted to raise funds at an attractive price. Tesla shares closed down 7.67% on Wednesday, some 30% off the record high touched in September last year. Clarification: the report has been modified to better explain the nature of the federal government investigation of the crash in California. CNBC's Gina Francola, T. Kim and Evelyn Check contributed to this report. Watch: Moody's downgrades Tesla due to Model 3 production delays.
Moody's Bruce Clark joins us now. Bruce, great to have you with us.
Great, how are you?
The ratings reflect, according to the note, the significant shortfall in the production rate of the Model 3. The latest rate that we have was about 25 Model 3s during the fourth quarter of 2017. How sensitive is your rating? In other words, when Tesla reports deliveries next week, if there's upside to that number, are you poised to upgrade the rating? And conversely, if there's downside to that number, would you downgrade it further?
Okay, I don't think that there's really a lot of upside from the rating right now if they exceed the 2,500 by a little bit. That 2,500 unit run rate is still significantly below where we thought the company was going to be, where they thought they were going to be. Conversely, if they're significantly below that 2,500, that's a negative sign because the company's got a relatively large cash burn right now, and they're going to have to go back to the capital markets, whether it's equity, debt, or converts. They're going to have to go back to the capital markets, raise a pretty significant amount of debt to cover that burn, help cover that burn, and also to prepare themselves for about $1.2 billion in maturities of convertible bonds. So not a lot of upside in the near term because they've got to hit that number, but there could be some downgrade. I think that's an important number for them to hit to show that they can make the vehicles, but also very importantly to show the capital markets that they can deliver.
Right.
And I think it's going to be a very important number for the capital markets.
Bruce, maybe this is a question you can't answer, but none of this is surprising, right? I mean, the last time they did a capital raise, a lot of people said, well, they're going to have to do another one because the cash burn rate is very strong. And in addition, you're already in junk territory, right? This is just deeper into junk territory. I'm wondering, why do you think that we see the markets, the equity markets, responding so negatively today in particular to this downgrade? Is there something new besides this?
Well, I got to be a little careful on that. I don't know why the equity market would be doing that, but you can clearly see there's some anxiety, rising anxiety, I think, about whether or not Tesla can actually stand and deliver on this point. I don't know what specific information or points the equity market might be looking at, but this is clearly a very critical time, and we're getting close to the point where they're going to have to make that announcement. And as you get closer to these inflection points, right, the volatility, the anxiety obviously could go up.
All right, Bruce, we've got to leave it there, but we appreciate your time. Bruce Clark, Moody's Investors Service.